I have to set up the mic. I have a new mic. I have to set it up on every page. Hang on. Coffee time. Yeah. Yes, gangsters wear argyle. At least the old G's, huh? Here we are. All right, I had to pull the chat. All right. Guten Morgen. Welcome to Forex.Today, the YouTube community of nearly 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. Hi. Every day there's something weird about this camera. Yeah. Sorry about the messy office. Sorry. Don't look at the mess. All right, cool. So anyways, my name is Wayne. I'm a currency trader. You're looking at the... Don't look. It's all messy. I'm a currency trader just like you. Been doing Forex for, well, over 20 years. Cool. And I'm still addicted to it. It's not an addiction. It's a love. I'm still passionately in love with foreign exchange trading. I also like the stock market, oddly, because there was a time in my life I used to laugh at the stock market. Well, I suppose I matured. I grew to love commodities like gold and oil. For a while, I tried wheat, and I think I did some corn, and I think that's about it. But no, I didn't really do that anymore. I used to get tons of taxes. Tons. My taxes used to be hundreds of pages long. And we would file them in November with extensions and extensions and extensions. And it turns out it was all because, well, the cash stock market was taxed one particular way. Stock market futures were taxed a different way. Commodities were taxed yet another way. Then Forex was taxed a different way. And then I was also trading like sort of whatever these Forex derivatives are. It says gold, it says WTI, but they're not futures contracts. So there's something derivative about them. And so all of a sudden it turned out all these different assets I was trading had a different tax treatment. It was almost like they were all separate businesses. And so, now I boil everything down to Forex because it gets the best tax treatment. I manage my corporate pension fund, and now I oversee the investment strategy of 3 endowment funds for a nonprofit group. And of course, I do that pro bono. Yeah. So cool. So now that I have a focus on the stock market, it's critically important. Not just for my money, but for others I respect and now have a responsibility to. So, hey, this is a real YouTube channel. And we're going to cover real life things like how does the stock market impact gold, oil, and Bitcoin and dollar pairs and yen pairs. If you want to talk about investment strategies, fundamental analysis, technical trading, both like things like scalping, spot, swing trading, we can do all of that. You let me know how you want to use this hour of power, because you're the boss and I am simply a humble servant. I invite you to visit the description below today's video. Can I even pop that up? How do I pop that up? Well, I guess I can just do it through the live stream. Here's the live stream software. All right. Look, in the description below the video, okay, there is a link to a trustworthy and ethical broker that doesn't trade against you. TradersWay.com I've been recommending for about 8 years. Check it out. I have a new service coming. there's a bit of a danger to this new service. Your broker might hate it. This AI technology that I'm leveraging has been reviewed and rejected by hundreds of brokers. So I'm going to launch it. Now, Traders Way wouldn't care. They're an ECN. They don't trade against you. So if you're going to trade, if you make better trades, they're happy. If you're successful, they're happy. They're just going to execute your trade. So, but for traders that trade against you, I don't know. I was thinking about it. Like I might have to put a warning on the site that says you might be banned from your broker because I don't know. I can't even say it of why. It just, even that seems to, but anyways, be careful. Okay. If you're not using an ECN, be careful. We might upset your broker. And that's that. I guess you'll have to figure it out. I don't want to get in trouble. So I don't know how to say it. So I'm going to have to work on that. Hey, if you want to learn how to trade, we had someone join QuantBox the other day, and then they dropped out, and I had Ryan follow up in there, and he's just like, well, it's overwhelming, and I don't know how to trade. Well, if you don't know how to trade, start an investor boot camp. Okay? And then once you're learning that, watch this video. It's about macro fundamentals. Or this, wait, that's the YouTube channel for QuantBox. Go there. And then this one. Watch this one as you're learning how to trade. You can watch this lecture on fundamental analysis, but over here, the $88 gets you like a 16-hour macroeconomic course. There's also another course, which is probably close to 16 hours, on monetary policy and central banking. So imagine 32 hours of nothing but hardcore fundamentals included for the $88. And that's not a month, that's per year. It's insane, right? Hey, do you want to try a virtual trading coach? It's free. Tradeplans.ai. So there's like in here, like here's my book, here's some more free training courses. There's a lot of stuff in the description below the video. You need to check them out. Okay. Cool. So what do you want to do? By the way, give me feedback on the sound with this new microphone. Is it better? Is it good? Is it worse? My old mic a year ago I thought was excellent, and then it just died one day. So I bought a very expensive mic hoping to get it even better, and it was nowhere even close. So then I went back and I bought the same mic from the first, and I can't get it to sound good. So now I bought this, but it's not radio voice good, right, Adam? I mean, it's good. You can hear me clearly, and there's probably no background noise. But it's not radio voice. In sooth, I know not why. I mean, maybe if my mouth is right on the mic. But if I'm here, it just sounds okay. Crisp and clear? Yeah. Well, I want it better than that. I want to sound taller. I want to sound skinny. I want to sound smart. All right. So we'll see. I'll have to listen to it, the recording. All right. So the stock market, today's a big day. By now, you should have somehow realized what you got to do. Okay. So today, I'm looking for a rollover. And if that doesn't happen, I will look for a rollover up here. And if it goes higher high, I don't know what to make of it. Yeah, total dork knows it. He mumbles that, right? I said maybe. All right. So anyways, I think you can think what I think reversal, which it did. And then I had it here to come down, which it did. And now I'm sweating bullets. Right? So I'm all right. And then what? I'm all right, and now I'm not right. So anyways. There are so many things I'd like to say to you, but I don't know how. Said maybe I want to have your baby. We have a couple new viewers from India today. Very cool. India. I've been to Delhi. I've been to Chandigarh. I've been to Jaipur. I've been to Agra. So my next trip to India will probably be southern India. All right. I didn't run into a lot of Forex traders in India, but, you know, I'm thinking at one party, you know, I'm just shooting the breeze with a couple of dudes there, and we talked stocks. They wanted to trade stocks. They were stock traders. And there wasn't a lot of interest in Forex. But I think Forex is complicated in India. Sure did like Jaipur. We had a lot of fun. Okay, Bitcoin had the big up. Look at this 4-hour chart. It's insanity, isn't it? It's insanity. So we're at 52, stuck on an annual resistance pivot. Annual R1. It's a big deal, eh? Oh, for sure. Okay, so anyways, got to pay attention to that. Yeah. Be interesting. So the next line in the sand for this sucker is over in here, which is the daily 21, or 4-hour 21. Daily 21 would be down here near 48. Maybe we could check that just quickly. Daily. Oh, it's even lower than that. Well, it's going to be up here in the future, so I'll call it 47. Is that true, Kevin? Or is it the rate in which new Bitcoin is created is halved? That would be the rate of change in supply would drop by 50%. Yes. Yeah. So, well, that would be different than supply cut in half. No, the rate of change in the increase of supply would be cut in half. Yeah. Japan slips into recession. Yes, and so did the UK. So you guys already know, I'm sure, the UK second quarter in a row with negative GDP. Japan second quarter in a row with negative GDP. Yes. Yeah, I mean, so I forgot to bring it up, but I already talked about it 2 hours ago at QuantBox. Like, it's already old news. You're like, really? Yeah. So sorry. It's weird. It's like 8:30 in the morning, and my hip is freezing up because I've been sitting in my chair for so long. I need to go for a walk or something. So yeah, 8:30 in the morning, and like I'll be eating lunch soon. Yeah, been sitting in my chair too much this week. All right. So, anyways, what about gold? I want to throw down a indicator, custom, biased pivots, bearish mode, daily with midpoint targets. Okay. And I want to zoom, 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 and a boom, boom. Today's trade plan. Okay. Today's trade plan brought to you by Lexus. Don't let someone else drive off in the car that you've always wanted. Lexus of Timbuktu. No, all right. Anyways, there's the day trade. Okay, that's in a risk off mode, but the stock market hasn't been doing it. Other things have started to go risk off. Okay, other things have started to go risk off, but we're not seeing risk off. So, got to pay attention here. Oh, I guess the news is coming out. Said maybe. I want to have your baby. Can somebody post the news? Was it a bad weekly jobless claims or bad retail sales? Let's see. Yeah, there it is. Okay, what is it? What, I can't see. The stupid YouTube thinks like the little heart thing should be right in the middle of the chat. Okay, down. Okay, yeah. All right. All right. All right. That's interesting. That's interesting. Okay, a decrease. Ooh. A negative retail sales means that the Fed policies are starting to work and that consumers are slowing their spending habits, capitulating to higher prices, or they've run out of money and credit. Therefore, the economy will slow down, inflation will cool, and the Fed can cut interest rates. Nice, isn't it? Okay, that's good. That would be a risk on. That would be a risk on. So I got to be careful over here now. Let me go over to the U.S. stock markets. And that would put some up, I think. I got to be very careful now. I can't remove my hedge until the market open. said maybe. So we'll see what happens, huh? Holy smokes. It's interesting. So that's very risk on. That could push this NASI to the next level. Remember, the bad news is good. Okay. Yeah, see, I got to get out of my hedge. I don't think I can. Let me log into my pension fund. I don't think I can. I can't. I don't think I can. Thank you, Forex, for being liquid all the time compared to this stupid stock market stupid stuff. All right. Yeah, I don't think I can. All right. Interesting. Let's take a look at the history of retail sales. What currency, what dollar pair are you trading against or trading with retail sales? What do you guys do? Pound dollar, euro dollar, Aussie dollar, USD yen? What do you do? I can take a look and tell you the history of what we're looking at. You don't look at things like candles. What do you mean specifically? Obviously, I'm looking at candles. There's candlestick charts. Highlanders, Aussie dollar. But I think what you mean is patterns, right? Or are you talking about individual candles? Because, again, I do all of that. 90% of the time, none of it matters. Everything boils down to something very simple. You buy a dip. I wouldn't override things necessarily because of one particular candle, but sometimes I do. Sometimes it matters. Hang on, I lost my research tool. Where the heck is it? Too many windows open again. I can't believe it. Oh, this stupid platform. Everything's going crazy. Sorry about that. Okay, trying to move windows around. Got QuantBox. Okay, I'll put that there. I just opened my research tool and now I can't find it. Where the heck did it go? I just had it. Not that. Not that. Okay, no, this is from before, although we could look at this now. Let's look at it now. Okay, let's move it here. Let's move it to back to June. All right, let's take a look. Okay. So yesterday there was a 53.8% chance of a cut in June at the June meeting. And there's slightly less. So I think this is going to change when the market opens. I think is what this is saying. So this is still people pricing in a May cut. So that's probably what's changing the most. Yeah, so from 26 to 28, but that's not statistically that big of a deal. I think this is going to change quite a bit today. Okay. So funny. I just opened my research portal and now I can't find it. Where the heck would have it gone? Need some simplicity in my life. I can't find it. Oh, there it is. Jane Criminy. All right. So, did you guys answer the question or has it been forgotten? Okay, Jim says pound dollar. Highlander says Aussie dollar. Denise says Aussie dollar. Oh, a lot of Aussie dollar. Okay, well, let's take a look. So, retail sales came out less than expected, right? So if actual is less than expected, Aussie dollar goes down in the past. Is this right? If the actual is less than expected, Aussie dollar has gone down. Euro dollar's gone down. Okay. So they're saying 75% of the time in the past, when retail sales in the United States was less than the expected, the 75% of the time Aussie dollar came down. Interesting. I don't know if that would be true this time around, though. Let's just look at some of these. Okay. See, the difference is the past does not predict future results, and we have to talk about this. What's happening is the bad news is good news, and only a fundamentalist would understand why this time the technicals would be incorrect. Now that it is correct that 75, or I could prove that 75% of the time in this situation, dollar would get strong because bad news was bad news. This time is different. The table is set differently. Okay? We are interpreting the data as forward guidance to near term or potentially near term monetary policy by the Federal Reserve Bank of the United States. So January 17th, we didn't have that. December 14th, we didn't have that. November 15th, we didn't have that. October 17th, we didn't have that. September 14th, we didn't have that. August 15th. These are all the previous retail sales. We had a different narrative. So that's the difference between fundamentals and technicals. And technicals doesn't take that into consideration. if you just statistically calculate what the Aussie dollar or pound dollar have done on retail sales misses, then there you go. Okay. We haven't had a negative delta since July 18th. (2023). Cool. So anyways, the bad news is good, and when things are good, the stock market rallies and the dollar weakens. And this is why I'm like, oh no, I got to get out of my hedge. Once again, I hedged. Okay. Because I have to manage risk. It's not about being right or wrong, it's about managing risk. So look how close we actually have gotten now to our target that I did in January, the beginning of January. We're in the middle of February, okay? And you can see the target and our current price. And once again, this could fundamentally change everything. So now we have competing pieces of information. CPI is hot. The Fed cannot cut interest rates. Retail sales is cold, so we can cut interest rates. And in particular, they offset each other where, okay, we have had inflation in the past, but in the future, if retail sales is cooling and the consumer is cooling, the economy will cool, inflation will cool, and the Fed can cut. Okay. Mayors on silver. You liking the silver? Okay. I don't really have any clarity, technically speaking, for silver. It might be moving, it might be jumping around, but there's no technical clarity on it. We can take a look. I have gold. Why don't we just do gold? Okay, so bad news is good. Gold should be up, and gold is up. Okay. And of course, I just had this trade plan of turning it around. So I would still think like this is going to be a problem area for gold. So on a 4-hour chart, yeah, it's mixed. There's on a 4-hour chart and a daily chart, there's some patterns, but they even conflict with each other. But fundamentally, probably would move generally along with gold. Now we wait for PPI. Maybe. I'm not sure what you mean by, is there any fundamentals for gold? Can you ask the question differently? Because I don't understand. I mean, the answer is yes, but it's so, I don't know what you mean. It's so generic and vague. I don't know how to, is there fundamentals? It's yes. but fundamentals are for everything, you know? Yeah. Okay, so anyways, we're in this zone. I marked this out a while ago, so let me just bring it into light again. Okay, we have this. And we have this. These are the things that have my attention. Well, yes, fundamentals move gold. For example, the traditional fundamental thought when it comes to gold is that gold is a hedge against inflation. Now, we are in a disinflationary period. Inflation has fallen for 2 years, and so has gold. That would be the fundamental trend. As Highlander points out, gold is used by central banks. In particular, India has used gold quite a bit in the last 5 years. So if I go back in time, I guess I have to go even further back. It was this move here. Okay, during this period, let me do some highlighting. I'll go back in time. And by the way, you can go back in time and find the videos of me talking about it here. But during this period, in particular this upward move in that period, India was buying gold. The Central Bank of India was buying gold at that point as fast as they could. And by the time they were done their process of buying gold, India had accumulated more gold than the central bank ever held ever in the history of India's central bank. So why were they buying so much gold? Well, that's a fundamental question. So to answer that, you would have to understand how central banks work. This is why there's a 16-hour course at investorbootcamp.com only on central banking and the management of money supply. Okay? It's important. Oh, by the way, I recently attended a presentation at the St. Louis Fed. It was a Zoom call, but it was very informative. And now I am registered to go to St. Louis in November. I'm going to spend 2 days at the St. Louis Fed. And it has to do a lot with changes in how the Fed manages monetary policy since I've done the training course. So like the training course is very detailed and you should take it, but it's already kind of becoming obsolete because the Fed is managing things differently. And there's a different way, different mechanisms. And so I'm going to go to the St. Louis Fed and they're going to give me 2 days of training and then I can update the course. Richard says you took, oh, you mean you're talking about the investor boot camp? Yeah, one? Yeah. Cool. So anyways, so let's talk about it. By the way, are you still with me? Umato show? Okay. All right. So what happened here was the Central Bank of India had a problem. Okay? And there was a shutdown during COVID in this period. You were not allowed to leave your house. A friend of mine who lives in India, he's a billionaire. Kind of nice to be a billionaire in India. But I was pinging him on WhatsApp because he was locked into his, his palace for months. But it was fun to get an update. I'm like, how's Mumbai, right? But anyway, so we had this point where you couldn't leave your house, you couldn't work, and the financial system broke down, and everybody needed cash. So we'll go back. So you had assets and you had liabilities. So, okay. So they have to balance, right? But let's go here. So the central bank needed to provide liquidity to the Indian economy. And they needed to put cash into the economy. So how do they get this cash off the balance sheet and put it into the economy? Well, they go out and they buy gold. So they take, let's say, 1 billion rupee. Okay. And they add 1 billion in gold by going to the market and buying gold. So the balance sheet, right, at the central bank is still balanced. They put cash into the economy, and this is what people needed. But they pushed the price of gold up. Okay? What's the consequence of putting more cash in the economy? The negative consequence that eventually hits. What's the negative consequence? Inflation. Okay, so now how does the central bank get rid of inflation? There's different ways, but on our topic, what do you guess? Now, Jim says it weakens the currency. That may not be a negative consequence, but it is a consequence, right? Yeah, well, what's an easier way? We're not talking about interest rate policy. Okay, what are we talking about? Okay, we're not talking about interest rates. What are we talking about? Money supply. So, in the context of what we're talking about, what could the central bank do? Sell the gold. Okay, what do they sell gold for? What do they exchange gold for? No, again, you're making it way too complicated. Very basic question. If they buy gold, they put cash into the market. If they sell gold, okay, they take cash out of the market, put gold into the market, and now the balance sheet is still balanced. They sold 1 billion rupees worth of gold, so the gold is out of the vault and gone. It's in the market again. And in exchange for the $1 billion or the 1 billion rupees of gold, they have 1 billion rupees. So cash went up and gold went down. They've removed the cash. So in times of disinflationary pressures, okay, see, the price of gold would fall. Okay. So just this we're talking about the fundamentals of gold. That's why you always have to stay on topic. So when I say, so what are they going to do to in times when inflation's falling? You don't say buy or sell bonds. No, that's not what we're talking about. We're talking about the fundamentals of gold. Okay? We're not talking about anything else but the fundamentals of gold. So you have to understand, if the market believes that inflation is falling, okay, a central bank wouldn't buy gold. Because when a central bank buys gold, it creates inflation. But the central bank doesn't want inflation. You see? It's a simple model, if you will, but you have to grasp that first and foremost. Does the central bank want inflation? If your answer is no, then gold will fall. Well, gold will not go up because central banks wouldn't be implementing a monetary policy that would go against their mandates and their objectives. So you have to understand the mandates and the objectives of the central bank. So you're like, well, the Fed is, fearful. They worry, they lose sleep at night that inflation might come back. So is the Fed buying gold? No, that'd be their worst nightmare. So they would not do it. So now you could go around the world and check all the other economies. Would China do it? Yes, they probably could. Why? They're in a deflation, not just disinflation, but deflationary period. Their economy is struggling, to say the least, and they would like to add stimulus. What does stimulus mean? Hey, would you like some money? That sounds good. So how would the government, in this case the Central Bank of China, what is one way they could add money? Well, they could buy gold. So again, that would be fundamentals. Is it actually happening? That's not really their objective right now. They're doing other things. All right. Well, what else could they do? Yes, they could buy bonds. Same thing as buying gold, but we were talking about gold. Okay? The thing is, you can't buy a bond and hold it forever. Even a 30-year bond matures. And very often, central banks don't want to buy their own bonds or treasuries because it seems like they're monetizing their own debt, which they are. So very often, it's just cleaner for a central bank just to buy some gold, put it in the vault. It's an asset. It's a currency. In many ways, it's a currency. Okay, what's a currency? A unit of account, a medium of exchange, and a store of value. Gold is pretty close. You could do your accounting in ounces of gold, but the problem is the price of gold changes a lot. So then you'd have to, then do a valuation calculation in dollars. But if it was just ounces, and that was your unit of measurement, and there was no cash, there was no dollars, let's say, it was only ounces, well then, okay, you could use gold in ounces. So a unit of account. Could it be a medium of exchange? Well, I could buy your house for so many ounces of gold. But can you buy a 12-pack of eggs, a quart of milk of exchange, but it's not a good medium of exchange? And is it a store of value? Yeah, sure. It does that very well. You can put it in the vault, and 1 million years later, it's still there. It hasn't rusted. It hasn't melted. It hasn't deteriorated. Okay? So, yeah, and that's why we like it. Okay? But when 1 ounce is $2,000 and you want to buy some bread, what do? You take out an ingot and you shave it a couple of times, screech. Well, is that really $3.89 worth of gold? You could be off by 300% with one shave too many. So it doesn't work that well for monetary policy. But you could hold it in your vault forever. So the more you understand the objectives of the central bank in managing its economy, the more you'll understand sort of the need for gold. So what we just had is a very bad retail sales number, which then makes people anticipate the central bank's next move. So it's not that retail sales matters. It's what this monetary policy of the central bank is going to be in the future, the near future, May or June. Okay? So if the Fed cuts interest rates, it's like having more money available in the economy. It's actually just cheaper money, but it increases, we'll just say it's inflationary. The cheaper money is, the more it could possibly lead to more inflation. So a period in which retail sales is falling shows that inflation is likely falling too, and it's the spread, okay, between the Fed funds rate, currently at 5.5%, and let's say interest rates, let's say inflation rate, we'll call it that, or I guess CPI. Let's say CPI, just so we're all following each other. Well, that's the worst drawn CPI ever. All right, let me regroup here. Okay, CPI is 3. Okay, we'll say 3.25. 3.25, and this is 5.0. Okay, this spread here is unusually high. It's not normally this way. What word do we describe this? What word do we use to describe when the Fed funds rate is 225 basis points above inflation? Now, Richard has the answer, but I think he typed it 5 minutes ago. I mean, he's that smart. That's how smart Richard is. He answered the question 5 minutes ago. Anyone else want to take a guess? Is anybody even listening? Hello? Ni hao. Salam, my good friend. What do we call it? What kind of policy set by the central government? What kind of policy has a 225 basis point spread above inflation? restrictive, 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 restrictive. This policy is designed to slow the economy down and reduce inflation. It's specifically designed to reduce inflation. Let's go back to the topic at hand. Do you want to own gold when the central bank is killing inflation by design? Cool. This is where I'm trying to lead you. So thank you for coming on this journey with me. So now, let's think forward. What if inflation now, because of retail sales, means in next CPI we drop to 3, and then June CPI we drop to 2.75? Is the spread between CPI and FFR getting wider or more narrow? Wider. So you could talk about this when you're trying to impress rich people to give you their money for you to trade. You could talk about the spread between inflation and the Fed funds rate, and that it's becoming way too restrictive. And you're like, we've gone from 200 basis points, okay, and then here 2.25, 2.5, 275 basis points spread. Okay? And it's normally like 125. So your rich person, by the way, is going to want to talk about this kind of stuff. Okay? So you got to say, well, in my humble opinion, if the spread is normally around 125 basis points and CPI drops, okay, you could say, let's just put it back at 3. Let's say long-term inflation is going to stabilize around 3. Then, in your opinion, the Fed over the next couple of years can drop to 4.25 by the end of 2026. Making money cheaper is inflationary. But see, the Fed can do it because they created a disinflationary environment. So they offset each other. But in this process, you might have a new regime of maybe now gold comes back. But I'm answering the question, are there fundamentals for gold? Yes. This is only one of them. But to understand that, you need to understand the business cycle and monetary policy. So in the training course at Investor Bootcamp, by hour number 3, you are learning to manage the balance sheet of a commercial bank. By hour 5, you're taking that knowledge and learning how to manage the balance sheet at a central bank. And then you start to learn the impact of that policy, whether restrictive or accommodative, to the economy. Nice. So it's been covered inside out and upside down and around and around. You just really need to know this. Now, to make things even more exciting, this is what I was talking about earlier. I just signed up for a course, so I will be traveling to St. Louis. Maybe we'll do a party. Anyone want a party in St. Louis in November? Maybe get some barbecue? Well, in November, and I don't have it on my, well, I have it on my calendar, but I don't know how easy it's going to be to bring it up on my phone. But in November, sometime in November, I'll be in St. Louis for 2 or 3 days. And I will be working with their staff to, how you say in English, I'm going to represent you. Yeah, it's before Thanksgiving. Yeah, I'm pretty sure it's fairly early in November. Wouldn't it be weird if it was during a non-farm payroll, so I'd have to do non-farm payrolls live from the St. Louis Fed? But anyways, I am going to get a deep dive update and review on changes in their monetary policy strategies. Oh, is that right, Lucas? Oh, man. I'm definitely going then. Yeah. If I was on the fence, but then, Lucas, you're like, well, I'd go. We can hang out together. Well, then I'm in. I'm just totally in. Let's do it. I'm going to St. Louis. Do you know a good ribs place? I think St. Louis is also known for jazz, so maybe we can do ribs one night and go to a jazz club another night. Yeah, so anyways, right? I will definitely be going there representing you. I'm going to get updated on their new strategies to achieve their policies. So the mandates haven't changed. But the meeting I attended last week with the St. Louis Fed had to do with the way that they allow banks to arbitrage as a means of monetary policy. Hang on, I got a funny email from a service, and they're like, "What? Stupid Amazon, gee whiz." All right, I have to deal with that later today. Okay. Oh, is that right, Darko? Yeah, it'd be I don't know if you want to come to that part of America in the middle of winter. Yeah. There's a lot of great reasons to come to America, but yeah, the Midwest in the winter is cold and dry. And anyways, yeah. Yeah, bring your jacket. There we go. I lost internet for a second or not? Yeah, weird. Yeah, the South is great. And Florida in particular. Texas is interesting. Florida is attractive. Georgia's beautiful. It's too cold for me, though. People complain about Georgia being hot. I've never complained about Georgia being too hot, but I complain about Georgia being too cold. Yeah, what to say about Miami? Yeah, well, actually, that brings up something very interesting. I'm not going to be able to do my Sunday and Monday live streams because I'm going to be in Miami. I'm just taking my daughter and I. We're just having some father-daughter time. And it's cold here and everyone's stressed out and all that kind of stuff. And I'm like, sweetheart, let's go to Miami. Let's go to South Beach. Let's grab your strappy shoes. We're going to Miami. So I'd love to meet with you, Maida. I don't know if it's in the cards on this particular trip, though. It's very, very short. It's very, we're just going. But I would love, right, to meet with you. Turns out it looks like Sunday is going to rain like crazy. So I think we're going to go to all the different museums and that kind of stuff. But so I'll be in Sobe. Yeah. Well, but the thing is, like I said, it's just father-daughter time and stuff like that. I'm not going for business and all that kind of stuff. A friend of mine that does a lot of art, buys and sells a lot of art in Miami. He goes there all the time. And he's like, oh, man, that sounds so cool. You're going there with your daughter. He's like, let me take care of you. And he called a bunch of restaurants and set things up. He's like, I got it all taken care of. You go here at this time, you go there at that time, right? But yeah, but that'd be cool. Yeah, are you far from there? I don't know how far South Beach would be for you, but I'm always in for coffee. Oh, right on. Well, that'll be great. In an hour. Yeah, that's far. That's far. I mean, look, I would love to do that, but you don't have to. Like, I'm going to come back to Miami. Okay, I'm going to. So let's say not to that, Maida. I'd love to, but I just want to say, no, don't come an hour and all that. And it's the weather's not going to be good. And look, I'm going to come back to. Here's the thing. I think I'm going to fall in love with the place, and I'm like, I won't want to come home. So anyways, I'm going to fly there, and cheer my daughter up, kind of thing. Be a good dad. And then I want to go back. I was going to plan that get together. So I'm going to come back and likely very soon. And we'll do something like we can get, right? We can get everybody, that kind of stuff. But anyways, yes, email me your number and, it'd be an honor to have coffee with you. But an hour, that's a lot. Yeah. All right. Yeah, it's all good. It'd be a great honor. Yeah, meet up. Coffee's good. So, anywho, there's the heads up for everybody. The stock market is opening soon, so I gotta go. I gotta decide whether I'm gonna panic on my hedge or not. Am I gonna hit the capitulate button? They were going to call it the capitulation button, but then panic was just fit better. No, it's not allowed here in Miami. Yeah. Oh, cool. Look at this coming back around. Very neat. Yeah, still plausible. Yeah. Um, it's all a timing issue, right? So I just got to watch and grin and bear it. So typically, what I'll do, and I'll leave you guys with this thought, um, I'll do things like I'm gonna pick the top and bottom here, and let me adjust this a little, and then I'm gonna trap it. Okay, so that those that are in my day trading group, we do trap and breaks, in particular in sideways or reversing markets. So I think there will be a telling sign. And, for example, it could do a breakout this way, but then, I will never, right, feel safe because very often you'll trap a break and then it'll come back because not everybody agrees right now. All right, so another important day. All right, public service announcement. Today is swing trading. Day traders and swing traders will be meeting at 4 p.m. to plan next week. So I will see you then, and that's at investorbootcamp.com. If you want to join the group, it's very exclusive. You have to pay money. That's it. You're in. But it's very inclusive in the sense that we work together a lot. There's a lot of camaraderie. Sometimes we do group work. It's really a good group. If you need some goodness in your life, $99 a month gets you there. Okay? Maybe cut that one. I could, but I don't have time to do that. I got things to worry about. Yeah. But if you ever want to know anything about gold or anything else, it's all in my brain. That's not the first time I've given that speech, and it's not the last time. Okay? All right. And Darko, just so you know, in the winter, you might like South Beach, Miami, even more than St. Louis. I have nothing bad to say about St. Louis. But I bet you South Beach. I mean, it looks so crazy beautiful, right? Yeah, unless you hate palm trees, you're like, ugh, if I see another palm tree ever again, I'm going to go coconuts. Richards End, St. Louis. Yeah. I'd like to go to Croatia, but in the summer. Yeah, many years, Maida, for sure. Anyways, I love you, babe. I got to jump. That was real. Peace on earth. May the pips be with you. May your profits be above average. That just happened.